Hey, what's up everybody? This is Evan Carthy from evancarthy.com. Today I'm going to go over a new post, ES Trading, SP500 Futures, precise entries exits for August 2016. Just like with all trading strategy in the Dow Futures for August, they are going to be updated as the month goes on with trades that are happening now based upon my technical steps that are lives. Some of them may be after the fact just because I won't have enough time to get to them, but they'll be my technical steps and how I would trade them if I was taking it. Obviously not all of them I am going to take. Currently I'm trading live the Dow Jones micros, the ES micros, and a bunch of other micros, but this post will be about the ES micros because the stock market, the SP500, has been going crazy the past couple days. So I just want to show you real quick what has been going on and why this is happening. So basically, as you can see from way back down here, where the lows were last June, price made a nice uptrend up down here from about 29.30 all the way up here till about 30.19 or so. But when that happened, there are a bunch of short setups that did not get completed on the move up. And so when you do see a move up, you want to see it kind of go in a stair-shaped fashion, up, retrace, up, retrace, up, retrace, stair-shape. Because what's happening is all the short setups are getting completed there, and therefore they're not going to have to come back and get filled. And that's exactly what happened here on this big move. See this move down here that that's been happening over the past couple of days right here. So the news is going to say it's all about the China-US trade wars going on, but basically it's just a bunch of technical setups that to the short side that never got complete until today. So before the stock market, it is going to continue its run up. Had to come back to complete these, so it is a good thing that even though if you're long the market or long stocks, it may not feel good, but actually is a good thing. So hopefully you got a little extra money on the side. You can start buying these dips because in my opinion, I think the stock market is going to continue to go up, but definitely these pullbacks are a natural thing. They have to happen. So we just want to show you a couple things. One, way down right here, right now this is on the 1 hour chart for it, but way down here I want to show you these big moves. You can pretty much trace them back to, on the moves coming back to the 76.4% level. So if you're using this high right here, let me take this green circle off, that pivot point high and this pivot point low, this one right here, see price went up, retraced back to the 76.4, and this started taking up. So what it did up here, one of the trade setups that it never completed, even though it was really close and probably close enough to be considered done, was this 423.6% short level where it hit the 423.6, never came back and hit the 261.618 level. Excuse me, 3.618 level, because these are the negatives since it's going the opposite way, so they're 100% higher than regular. So never came back and hit, even though in my opinion for all intents and purposes it is, but I just want to show you what happens to this. So price went up and then hit the 423, never came back, and or excuse me, the negative 5.23, never came back and hit the negative 4.23. Came up here and hit the 8.236% level, never hit it, and then just kept skyrocketing up. And then another fib level that when it just goes crazy, that seems to be a stopping point for it, is way up here. It's going to be the negative 22.236. In fact, I need to adjust that here. Let me, I don't know if I got the right thing right here. Yeah, that's that. Oh well, I'll just later. I'm missing the thousandths of the place to the 6. See if I can find it here real quick. Don't want to take too much time. If I can, it's not that big of a deal. There it is. 6. Okay. So that's it right there. So as you can see, when price got up here, starting about right here, this is when it became a range bounds. Now I don't do too much with trend line support and resistance levels, but it is good to show after the fact, because that's basically, in my opinion, what they're best for is after the fact. I've never been able to figure out how to trade them profitably, to use them correctly, except when it's after the fact. So as you can see right here, starting about last June, beginning of June, about June 2nd, it entered this range bound up here. And so at the time, it didn't really look like it because it looked like price is just getting ready to keep on continuing back up, but that's actually what was happening. It's going to range bound market, and then before it broke out to the downside, the black lines I have right here are the lower line and the upper line of the resistance levels. Let me just go delete them so I can delete some lines off of it here real quick, and we'll come back to that Fibonacci level down there because we'll talk about that here a little bit more in a second. See, price came down here, and the black line that was the support level was right around here. So all the people looking at the support level, which was right about right there. See all the people playing. You see how that kind of the resistance became support, and then what it did down here for a day, it flushed out a bunch of people. Came down here, flashed down past the support. Chased some people out right there, but then went and started making a fake retracement higher, looking like it's fixing to break out of the high since it had that fake retracement down. But then lo and behold, look what happens. So if we use that pivot point right here and that pivot point again, that flash low, look what it hits right here. Perfect. The 0.764% retracement level, and for what I've seen, this is where big moves happen. For whatever reason, when price comes back to here, not every time, but when these big sudden moves happen, that's where the retracement level comes to from a Fibonacci move. So price went up there, ticked off it perfectly, and it's been going down pretty much straight ever since. This yellow box was a setup that just got completed, a short side setup that obviously got completed. Take that off of there. So price has been going down ever since, and currently where price is on this one right here, it's still not at the negative. That's going to be the 3.618% extension level for this move right here. But I just wanted to show exactly where it is going down from that one. In fact, I do want to mark these because that could be a trade setup coming up. And I do want to talk about a trade setup that is in it today that I was talking about in the charts. But anyways, let's go back to the one over here that I mentioned earlier. The one down here, it retraced down to the 76.4. Let me go enlarge this a little bit more and make it easier to see. Because as you can see from this one, using that pivot point low, that pivot point high, price came down, retraced to 76.4. And then look what happened up here when price finally got stopped out, because down here it hit the 323, never hit the negative 2.618, hit the 423, never hit the negative 3.236. So this right here is an open trade to the short side that needs to get filled right there. So price needs to come back to the negative 3.236. I made the black line right there just to highlight a little bit more. So it looked like price is never going to come back down to it, but then look at the very top. Look what becomes the resistance level up there, the 22.236% resistance level. And that's one thing I've noticed for some reason. The 8.236 and 22.236 on these extreme moves seems to be resistance levels for it. Price came up, hit there perfectly, used that resistance, and then just started going straight down. You see today it finally came down and took that out. So that move is finally complete as well. I'm going to go back to this right here. This is the contract for this quarter, the September e-micros. So this is one I was talking about in the blog post today that is currently live. This is, and it's based off the 15-minute chart. I'll just scroll back to 15 minutes to show how it is, because pretty much every trade that I'm going to show in that post is going to be on the 15-minute, which is where I got it from. If I show it on like the 1 hour, 4 hour chart, it's just because to fit more bars in on the chart. So using this pivot point low and that pivot point high, well, that's going to be the end result of it. But basically what happens is using that pivot point high, that pivot point low, see price comes down, hit the 76.4 level. That gives you the anchor point at pivot point high, pivot point low, anchor point. Price comes up, hit and hits the 1.236 extension level. That validates it. So this is valid setup now. So then all we start doing is dragging our Fibonacci retracement level up until the 76.4% level comes down to get hit, which it does. When it hits, it's 50% level is going to be the exit. Obviously that never hit. Then when it hits the 100%, the 76.4 level is the exit, and obviously that didn't hit. So that was the current exit right there at the time. Price never hit that, and now price just been going down ever since. So once price hits the 2.618% Fibonacci extension level, then that moves the exit down to the 100% level, and it doesn't move from there. So that's going to be the final exit for this move. And as I mentioned in the post, I think what I posted today is right around like this time right there, and I said, look, I wouldn't be surprised if price comes down to the 4.236 extension level, and probably goes even lower, because this thing's flushing a lot of things out to complete all these short trades that never got fulfilled. So that's what we're looking for when the market finally does get some solid footing. It doesn't look like it's going to happen, an overnight session. You see a little gap, but it came up and filled there. So if you're looking for kind of like an extreme area for it to go down to right now, I would look for the 8.236 area, which is around 26.56. Not going to guarantee it's going to go down that low. It just depends how long the market makers, the institutions, the banks want to run this thing to make a lot of money, because I guarantee you, when price was waffling around, let me go to the 1 hour chart so you can see a little better. When price was waffling around all here for a month, they were getting themselves all set up to the short side. They're exiting their longs and getting ready to run this thing down. So as soon as enough of them got enough short positions, they run this thing down. And so what's going to happen is, as soon as they're able to exit enough of their short positions and go long again, then they'll run this thing back up. So I don't know if we'll get a V-shaped recovery like that where it shoots back up again, but eventually it will happen. It just depends when it is. So if you're looking to start nibbling to get long for the SP 500, this could be a good area to start for it, because like I said, the exit I'm looking for is 29.70 up here, but it may not happen today, tomorrow, this week, or next week. It could waffle around for a bit so that people can start positioning themselves longs for the running back up again. But it may be an interesting area to start thinking about positioning yourself going long. So anyways, just check back on this every so often. I'm going to try to get this updated for any new trades that are going on, but in this particular setup, it's 76.4% long, and looking to exit around 29.70 or so. All right, thanks. Have a good one. Talk to you later. Bye.